Is Tesla actually worth $1 trillion? Or at the valuation as what it is now at $500 billion? Or maybe it's worth $30 billion. What is it? What's the real value of Tesla? Well, to be honest, nobody knows the real value of Tesla. Yes, 90% of their entire revenue and net income is coming from vehicles. So, does that mean that we should compare Tesla to other vehicle companies and get the similar PE ratios and market cap and stock prices as them? Or do we compare Tesla to an AI company because they are working on robotics, AI, full self-driving, and other techie stuff? Or we'd compare it to energy stocks because Tesla, well, they are working on energy, solar panels, batteries, you got superchargers, 4680 battery cells, and so on and so forth. Or, bear with me here, we compare it to insurance companies because Tesla also does insurance. So what do we do? What do we compare Tesla with? And what are they actually worth? And in today's video, that's exactly what we're going to dive into and try to find out. So if you guys are ready, let's get down to it. Don't forget to smash that like button and subscribe if you haven't already, man. Let's go. So as you guys can see in the Excel sheet, I got the Tesla stock price prediction for 2022 and 2023, and I got the price to earnings ratio for pretty much all the industries that Tesla is associated with because, they're a car company, they're also an AI company, they're also energy company or a solar panel company, they're also an insurance company, and later in the future, they're going to be a robotics company. So we got to figure out and compare all industries and figure out what the right PE ratio is, net weighted by their appropriate percentage. As you guys can see in the percentage, I put 90% for the car company because at the moment, 90% of all revenue and profits is coming from the vehicle side. That's a fact. I put 2% here for the FSD and AI company. Although this 2% is a conservative approach, don't bash me in the comments, I know. But as usual, we're keeping things conservative. For the energy section or the solar panel section, I put a net weight of 6% because in the recent quarter Q3, they grew about almost $1.2 billion. That's insane. For FSD, we don't have much data. The only data that we have is based on speculation, and it's really hard to go forward with speculation. For example, you guys see here in 2022, I'm expecting or guessing or estimating or forecasting that by end of 2022, FSD profits would be over $1.2 billion, which is insane. And if this is actually true, and Tesla verifies that it's true, then obviously the 2% is going to be more than 5% for the AI or the FSD company. And last but not least, for insurance, Tesla Insurance, I put that for 2% as well because although they're growing, we don't know if they're actually making money. And obviously we can't put a PE for something that's not making money. Now Tesla is saying that they're making money from other ways. As we can see in their financial reports, it says income from other operations. I wonder what those other operations are. But we're going to keep it at 2% just to stay conservative, although it's rapidly growing. We're going to go ahead and compare car companies, AI companies, energy companies, and insurance companies to see what their PE is trading at and see what's appropriate for Tesla. This video is going to be pretty darn juicy, I'm telling you. Sheesh! I hope you have your popcorn. Now what I'm saying in 2022 is that I'm predicting that they're going to do about 1.35 million vehicles deliveries this year with an average selling price of $52,000, and if you add the FSD as well, we get over almost reaching $73 billion in total revenue, which is about pretty much a 42%, 45% growth for revenue year over year compared to last year. But what's more impressive is the net income, because with the net income, with a 15%, most likely it's going to be towards 16, 17%, but with a 15% and also adding some profits from the FSD, we get over $12 billion. And we're not too far off. I believe Tesla only needs about like $4 billion or $4.5 billion to reach 12 billion. So sheesh, we're there. We're pretty much there. And we know Q4 is going to be pretty awesome for Tesla. We know this. It's a fact. Speaking about facts, if they do north of $12 billion in net income this year, that's over 100% growth for net income compared to last year. That's interesting. A company that's growing 100% year over year, at least from 2021 to 2022 and most likely to 2023, as you guys can see, we're almost reaching the 50% mark if you do 2.2 million vehicles deliveries, and with an average selling price of $49,000, with an OP margin of 18%. Most likely it'll be 20%, but I'm saying 18% to stay conservative. We get almost $23 billion. Almost a 50% growth year over year at a time where things are terrible. You guys don't believe that Tesla's going to do 2.2 million vehicles and deliveries next year because of a recession? Watch them. They will do it. Unless China goes ahead again and shuts down their factory because of the COVID stuff, then we'll probably could see below 2 million. But if that doesn't happen, then we can easily see 2.2 billion. Easy. But going back to my point, Tesla is growing over 100% from 2021 to 2022, and yet they're at a 50 PE. Doesn't make any sense. And you guys will see why it doesn't make any sense once we compare other companies to Tesla in terms of the PE. It's just ridiculous. All right, let's get down to the comparison. If you guys are ready, it's about to get darn juicy. Smash that like button. Let's go. So let's start off by comparing Tesla to other car companies because,
Tesla is just a car company.
that statement always gets me. All right, so let's start off with Ford. At the recording of this video, Ford is trading at a 6 PE. Toyota is trading at an 11 PE. GM, 6 PE. Hyundai, 7 PE. And Honda, 9 PE. Wow, Pejjy, look at this. They're all trading not even in the teens. So why is Tesla trading at a 50 PE? That doesn't make any flippin' sense. Well, let's look at other EV companies that's actually making money. BYD. 75 PE. Last time I checked, BYD is only a car company. So why 75 PE? We'll get to that in a bit. Next on the list here is Polestar. And yes, recently they hit a profit in the previous quarter and they're trading at a 4 PE. If they continue making money and showing a positive earning net income quarter by quarter, we can see the PE to grow between 20 to 30, probably 40 if they're growing massively. Polestar is only a car company. All right, now let's go ahead and see what's going on here. Why is Ford trading at a 6 PE and Toyota 11 PE? Well, let me tell you guys why. Ford, there was no growth from 2018 to 2022. No growth still equals 6 PE. I don't understand why people are still comparing Tesla to Ford. Anyways, Toyota makes more sense because, I'm sure you guys heard a lot of YouTube say, and the data is right, that Tesla's going to be making more money than Toyota at the end of this year. And they're only doing 1/10 of vehicle deliveries compared to Toyota. So that's a pretty big deal. But yet they're trading at an 11 PE. But let's dive in more deep into Toyota, all right? Toyota's revenue has only grown 2.5% year over year from 2018 to 2022. If they do 40T, which is Japanese yen, this year. So 2.5% year-over-year growth for the past 4 years. Let's look at profits because that's more important. From 2018 to 2020, they've been growing at a 17% growth year-over-year if they finish off this year at 3.35T, Japanese yen. 17% growth year-over-year. 11 PE. Tesla growing 50% growth year over year. People still saying that they should be the same value as GM and Ford, which is 6 PE, 10 PE. It just doesn't make any sense, I'm sorry. It just doesn't make any flippin' sense. Now let's compare to something that's more realistic. BYD, because they're trading at a 75 PE and they're projected to grow around 70% next year. Overall, if we look at the big scale for the next 5-6 years, including the past 3 years, BYD is growing at a 25-26% year over year growth according to Simply Wall Street. So why is this at a 75 PE? Which is only a car company, and Tesla trading at a 50 PE. Oh, I get it. Elon is at Twitter. He's no longer focusing on Tesla anymore. It's gonna go to zero because he's not there anymore. Come on, guys. Get your fundamentals right. So now the question comes, what do we give Tesla the correct PE for their car business? 75 PE, well, that's projected to grow 70% next year. Tesla, we don't think they're going to be growing 70% next year in terms of net income. Most likely their vehicles will if everything goes according to plan. Their net profit, I put here as 18%, around $23 billion in net income, which is not even a 50% growth. So we can't say a 75 PE for Tesla. It just doesn't make any sense. But we also can't say a 10 PE for Tesla as well because they're growing massively. Toyota's not growing. Only 2.5% revenue year over year and 17% growth in terms of profits if they do 3.3T this year. If they don't, it's much less than 17%. And not to mention, they don't have margins like how Tesla does or the leverage. So what's the correct PE here? It's not 10, it's not 75. I'm going to say 50 PE because again, if BYD, which is only a car company, and they're at a 75 PE, and they're going 70%, I think it's safe to say a 50 PE is right for Tesla. Comment down below if you guys agree with 50 PE for a vehicle side only, because again, I'm comparing to the industry. And that's what the industry is saying. They're saying that legacy automakers, not high PEs because we don't expect much growth for them in the future, but a company like BYD, which is growing in the EV section and growing very strong. So in my opinion, I think the market has spoken. And I'm going to say 50 PE makes sense if they're going to continue going 50% year over year. 50 PE here with 90% net weight, we get 45 PE. Let's move on to the FSD or the AI companies, which majority of them, which is Cruise, Waymo, I don't know, the other FSD companies, man, the other autonomous driving companies. That's purely into this alone and nothing else. They're not making any money. Tesla is actually the only one that's probably making any money. They're making pretty good money at around like 44% growth of just profit per each subscription or per each one-time fee. It's literally a cash cow for them and will be in the next 4 to 5 years once FSD becomes a normal thing. Yes, I highly do believe that FSD is going to become a normal thing in the future. We don't have to drive anymore. But AI companies, FSD companies are tech companies, and the average industry for that is between 20 to 25. I'm going to put 20 just to be conservative. Now moving on to the energy section. Now the energy section, I specifically looked at renewable energy companies because that's what Tesla does too. A few that I found here are pretty solid. They're good companies to invest in for long term as well, like CSIQ, which is Canadian Solar. I used to have a lot of shares of that before going all in into Tesla stock. That's a fantastic company and has a great future ahead. But that's trading at a 17 PE, and they're going to be growing pretty much a 2x this year. Another company here that I used to invest a lot in before going all in into Tesla is NPI.TO or Northland Power. Yes, Canadian Solar and Northland Power, they're both Canadian companies. Gotta represent, but Northland, they pay a dividend and they're growing fast. And, I love that company. I kind of felt sad selling that company to accumulate cash to go all in into Tesla stock. That's a very solid company. But they're trading at a 13 PE. Then we got First Solar at 181 PE. Then we got Infis Energy, which is around 150 PE, and they're growing massively. I think this year they're going to be growing around 3x in terms of the renewable energy business, which is absolutely insane. And by the way, Infis Energy is a little bit similar to Tesla, as they just, do pure solar panels, batteries. So they're more closer to Tesla's business, kind of similar compared to CSIQ or NPI.TO, Northland Power. So I would be eyeing this one more as a comparison, but let's keep going forward. Then we got Solar Edge at 139 PE. So what's the correct PE for Tesla here? Is it 10 PE? Is it 30 PE? Is it 150 PE? What's our logical and right PE? Well, if we look at CSIQ, they're a pure renewable energy company. Solar panels for companies, and I'm pretty sure they do for residentials as well. But Tesla's business is more closer to Enphase's energy. Batteries, solar panels, renewable energy. It's more closer to them than CSIQ. But let's keep it conservative. I'm going to say at 20 PE. With a 6% weight, that's about 1.2 PE. Insurance companies, at the average, their PE is around 27. I'm going to say a PE of 10 because we really don't know how Tesla Insurance is growing. Yes, they're growing rapidly and fast, but we don't know if they're making money or not. This info is yet to be clarified by Tesla themselves. We'll know as we go forward. All we do know is that they are expanding massively and aggressively. And a lot of people who do go to Tesla Insurance, they don't really go back to others because they save a boatload of money when they go to Tesla Insurance. So I'm going to give it a PE of 10 at a 2% weight, and that gives it a PE of 0.2. Total PE, if we do a net weight over it at a very simple basic math, we get 46.8 PE. Now it's time to see what 2022 is going to look like. Now guys, mind you, 46.8 PE. That's what it should be, the real value for Tesla if we look at today, and if we forget and not look at their other things that the Robotaxi and Tesla bought, which obviously if you add them in, that's a little bit of a PE of themselves too. But let's go and see what the real value of Tesla will look like if we're basing it on this and this alone. All right, so 46.8 PE, which by the way, I disagree. I mean, a PE below 50 in 2022 and they're going 50% year over year. It's just ridiculous. It really is. But let's just go based on this and let's see what we get. 46.8. You guys are ready? Drum roll. Let's smash that like button. $178 per share and a market cap almost reaching $600 billion. Personally, this is a bear case. This is an absolute bear case. Now remember, this is after when they fulfill Q4. They fulfill Q4 and it is 1.3 million vehicles deliveries, and they have a net income of over $12 billion with a 47 PE almost. $178 per share. And that's at a market of what it is now. If we're in a bull market, the PE obviously is a lot higher, at least 65 PE, which I believe is more suitable to be around at this time. Although I do believe that the stock should be worth around $300 per share, because I do believe that Tesla is worth around an 80 PE of $1 trillion at the moment because of how fast they're growing. But let's just put 46.8 as like the conservative case, and that's the right price of end of the year if you look at it like this, the real value of Tesla, which I don't agree with. That's just a bit over $500 billion. But if that's what we get, that's what we get. Let's move forward to 2023. 2023, the AI, the FSD is going to be a whole lot worth more than just 2% of the entire company. I am going to leave the 50 PE for the car company section for Tesla because they are going to grow massively, aggressively, not to mention other vehicles coming in, the Cybertruck, probably the announcement of new gigafactories, probably the announcement of the 30,000, 25,000 vehicles. So we can see massive growth for Tesla. So I'm going to keep it at a 50 PE. I think that's fair. For the AI, however, if we look at this chart, look at this Looper. Looper has they've dived deep into Tesla's FSD. And as we can see, they're projecting a 50% margin, 64% margin by 2031. Like, sheesh, that's insane. But look at the profits gaining. Look at that. They're expecting about almost 2 billion in 2023, and then 3.3, and then 5.4, and then almost a double to 9.2. And then 50% to 14.4, and then 24, and then 38, and then almost a double, and then another 40% growth to $102 billion. So really from 2022 to 2023, that's like a 70-80% growth. That's absolutely insane. And then from 2023 to 2024, almost a 50% growth. So it seems like they're gonna be growing at like around a 40 to 60% growth year over year. Bruh, that deserves a 20 PE. You kidding me? That's like almost the car section. They're growing out of, come on. I'm going to give this a PE of 50. And I'm going to change the 2% to 4% and 88% for the car company because Tesla is becoming less of a car company as the years go forward. And that's a fact. For the energy sector of the company, they're growing at like over 60% year over year. And they just hit record, almost $1.2 billion. And this will grow exponentially, not linear, exponentially. If you look at Enphase's Energy, 150 PE, and they're going to be 3xing. Tesla is 2xing. So really, a 20 PE does not make sense. I'm going to say 50 PE. I think that makes sense. A 50 PE at a 6% rate. Again, I'm going to say 8% here. We get a PE of 49.2. And for the insurance, I'm going to leave it at 2% and at 10 PE because we need more data. And Tesla's not really showing what the profits are or the revenues are. All they're saying is that they're growing massively. And if they are making money, then a 10 PE is no. A 10 PE just doesn't exist. At least a triple is what the average is. A quadruple or a 50 PE would make sense because they're growing rapidly and fast. Total PE for 2023 of 42.2. Let's go ahead and put that in for 2023. We get a stock price of $339 per share. And if you guys seen it, man, look, shares outstanding has been diluting from 2022 to 2023 about like 4%. $339 per share and a market cap over 1.1 trillion in 2023. Count me in. Count me bloody in. There's a major disconnect with Tesla stock price to what it should be and to what it is now. I don't understand. I don't get it. I guess it's the Twitter overhang and I guess it's the Fed. Tesla appoints a Twitter CEO and if the Fed pivots, we can probably see a big jump to Tesla price around like 30-40%. There's really no reason why it should be down this much. Yes, but Tesla is just a car company. No one wants to buy cars during a recession. Then why are they selling every single car that they make? Explain that. So, what's the real value of Tesla? Is it worth $500 billion at the moment in a bear market? I don't know. Is it worth $1 trillion? In my opinion, yeah, I think Tesla's worth about $1 trillion. But no one knows. It's just what the other investor is willing to pay for it. That's it. What will be justified, what will justify the investment and the worth of the company is a net income. For example, by 2027, 2028, Tesla does $100 billion in net income. You cannot say the stock price is worth only $10 billion. That's just stupid. It just doesn't make any sense. Most likely, if you put a 20 multiple on that, you get a stock price of $629 per share and a market cap of $2 trillion. Another investor may come along and say, no, it's too cheap. They're going to grow at a higher rate. They're going to keep growing fast. I'm going to give it a PE of 25. Kind of like what Apple stock is now. With a 25 PE at $100 billion net income for Tesla, that's about a stock price of $786 and $2.5 trillion. Another investor may say, no, hold on, man. If they're continue going at like 20%, 30% growth rate, then no way. They're worth a whole lot more. I'm going to say a 30 PE, so on and so forth. $3 trillion, the valuation of $1,000 per share. It's all based on what the other investor is willing to pay for. Nobody knows the real value of anything. It's just what the other investor is willing to pay for, supply and demand. What I'm saying about Tesla stock, in my opinion, is that if Tesla stocks can growing 50% rate year over year with a massive net income, with a 30% margin for the next 4 to 5 years, they should be trading at a PE between 60 to 70, in my opinion, because they're going to continue to make a whole lot of money in the future. Don't forget, guys, we're investing today for the next 5, 10, 15, 20 years. We're not investing now for tomorrow. That's a day trader, swing trader. We are not that. I am not that. I'm investing into the company that their future earnings are going to be massive. And that deserves a PE between 60 to 70. So in 2022, a PE of 60 is around $229 per share, and 70. $267 per share. That's where I think the right value is right now for Tesla. I do believe that it should be worth $1 trillion because what Tesla is doing $1 trillion, but we are in a bear market and all investors are like, no, company's not worth as much as they are because of interest rates and recession coming. No one wants to buy a car. Nobody wants to buy things. They're going to be saving and all these yada, yada, yada. That automatically brings the PE lower. But in a bull market, the exact opposite happens. So again, going back to the question, what's the real valuation of Tesla? In a bear market, if things continue to go down and everyone is full of fear and pessimistic and the sky is falling, then yeah, a PE of 46.8 at the end of 2022 when they released the Q4 will give us a stock price of 178. And I guess you could say this is the real value for Tesla, even though I disagree. But we're in a bear market and the bear market does what it does. But if this was a bull market, man, we can easily see a PE of around 70 to about 80. Easy. Like $300 of $1 trillion is easily. But again, bear markets, everything comes down. PE comes down, valuations come down, everything comes down, and sometimes they come down so stupid, so cheap, like what Tesla is now. And yes, I'm going all in than ever before. Cashless at the moment, and I'm waiting to get a paycheck so I can buy more shares. Absolutely ridiculous. But at the end of 2023, which I do believe we're going to be leaving the recession and slowly going back to normal times or a bull market unless something else happens, which nobody knows, nobody can predict. We can see a PE, reasonable PE of around like 42, 45. Which will give a stock price of 300. But if we're in a violent bull market, which I do think that's going to happen, then we can see a PE easily between 50 to 60 next year, reaching all-time highs at the end of 2023 or at the beginning of 2024 when Q4 comes out for 2023. So sheesh. This is why it's very important for you guys to do your own valuation and come up with your own conclusions. Again, I'm not a financial advisor. I'm just a guy on YouTube who's going all in into Tesla stock. Well, 98% of my entire portfolio is in Tesla stock because of the value I see in the next 5 to 10 years coming. Again, I do believe by end of 2030, we should be seeing a 10x or even a 12x from what the stock price is now. I do believe by 2030, the stock price should be worth around like 7 to 8 trillion. I know these are big numbers, but if everything goes smoothly, 8 to 7 trillion makes sense in my opinion, in my evaluation. And I encourage you guys to do more research, more DD, and come up with your own valuations. That's the only way you're going to stay committed to anything, whether it's Tesla, Amazon, Google, and other companies that you guys invest in. But the real question comes now, how massive is Q4 going to be? Well, I did a video right here predicting what Q4 will be and what the stock price could potentially be as well. It's pretty darn interesting. You'll find some good value. You won't be disappointed. Don't forget to check out some merch and don't forget to subscribe, and I shall see you guys in the next video. See ya.